Hello, welcome to YodaTrade. Today, let us understand the crossover strategy of SMAs and backtest this crossover strategy of SMAs in the YodaTrade website. So, before backtesting the strategy, let us understand briefly about SMAs and the crossover strategy. The SMA, that is the simple moving average indicator, is one of the very simple indicators usually used by the traders. This indicator helps in identifying the short-term and long-term trends of a particular stock. It also helps in identifying the resistance and support levels. Since it's a trend following indicator, it does not predict future values, but it will be based on past values of the stock price. So what exactly is moving average? Moving average is the average of a series of past stock prices over a defined set of period. So let's understand this with an example. So as you can see, the table consists of day column and price column. That is the price of closing on a particular day of a stock, say ABC Private Limited. Okay. So for this example, let's try to compute a 5-period simple moving average. The 5-period moving average, that is 5 SMA, for the data is calculated using the formula SMA is equal to summation of all price point values, that is summation of all the price values as shown in the table, and divided by the period or the length of moving average, which is 5 in this case. When we substitute the values, we get the answer as 329, which is the 5-period moving average for this example. In this example, we have considered the closing prices of July 1 to July 5. And let's say if we obtain the price of July 6, then the 5-period moving average will be calculated using the values from July 2 to July 6, and we leave out July 1 price. That is because always in case of 5-period moving average, the latest 5 prices are considered. So in this case, when we obtain the value of July 6, the latest 5 prices does not include July 1 price. Calculation in this example is with respect to 5-period moving average. So similarly, we can have any period or length of moving average. The SMA consists of different lengths of moving averages. For example, we have some standard lengths being the 5, 10, 50, 100 and 200. So these are some standard moving average lengths. The shorter period moving averages, for example, the 5, 10 and 50 SMAs are usually used by intraday traders, whereas the 100 and 200 SMAs are usually used by long-term investors. The shorter period moving averages are very sensitive to the price chart. In this particular example of Nifty 50 index, you can observe the chart here. So I have the green line which represents the 50 MA, whereas the blue line represents the 200 MA. So one thing which we can observe is the shorter period moving averages among these two is the 50 SMA, and this closely represents the price chart, as you can see. So the green line is very close to the price chart, whereas the blue line is far away from the price chart. So the long-term investors usually use this blue line or the longer period moving averages only to get the long-term trend of the price or the stock, whereas the day traders use the shorter period moving averages only because they depict the real-time trend of the price. Okay, as we are now understanding the crossover strategy, the crossover strategy consists of application of both the long-term and the short-term moving averages. So in this particular example of Nifty 50 index, I've taken a 50 SMA and a 200 SMA, right? So the crossover strategy simply means that, so whenever the green line crosses the blue line, you can observe a rising trend, right? So this is because the shorter period moving average, that is the green line, is crossing over a 200 period moving average, which is a longer period moving average, right? So whenever this green line crosses below the blue line, the trend is falling or the trend is a decreasing trend. So this means that, so this is what the crossover strategy means. Whenever the shorter period moving average crosses above the longer period moving average, the trend is increasing, and whenever the shorter period moving average cuts the longer period moving average and goes below it, shows a downward trend or a decreasing trend. Let us observe this with another example. Let's take Infosys. So again, here you can observe, so whenever this green line cuts, which is a 50 MA line, cuts the blue line which is of 200 MA, we can observe a increasing trend, and whenever the shorter period moving average cuts the longer period moving average and crosses below it, we can observe a downward trend, right? So again, here we observe that the green line is cutting blue line and is going above it, and the trend is increasing, and whenever it cuts blue line and goes below it, then there is a bit of downward trend. So this is what the crossover strategy is, and let us try to backtest this kind of strategy in the YodaTrade website. So let's add a script which we have here, which is the Infosys. Let's keep 5-minute interval. Let the start date be 15th July, and then let stop date be the present date itself. Yeah. So let's say the initial capital is 20,000, and let's say the quantity is 15, and the start time and end time, let they be default. Candlestick, MIs, and then entry. So here we shall apply the crossover strategy, which is SMA. So let's let the primary indicator be a simple moving average of length 50, and the comparator be when it crosses above the longer period moving average, which is SMA of period 200, right? Yeah. And also let's add an exit strategy, simple moving average of length 50 and crosses below the simple moving average of length 200. So this is when we exit, and let's add a stop loss of 1% and target profit of 5%. Let's name the strategy as Info crossover SMA. So let's now save and backtest it. So here we have the backtest, the results of the backtest. So we have the summary of the strategy here, and we have the equity curve. So this equity curve gives a graphical representation of change in the value of the trading account, and here we have certain here we have the summary of the backtest results, that is the number of wins, number of losses, and maximum gain, maximum loss, and the stock performance too. And here we can observe the chart, and so this is the list of all the buy and sell signals that have triggered over the given period of time. So since we have the positive results, we can just go ahead and deploy it. We can deploy it. So we can click on all deployed strategies. So here we have the first one, which we just deployed, right? We can, if we want, we can also undeploy it. So we have to click on all undeployed strategies, and we get it here. We can just edit the strategy by clicking on view backtest and then edit. This was a short tutorial on how to come up with a crossover strategy and deploy it in YodaTrade website. So that's it from me. Thank you so much. Happy trading.